Okay, testing, testing. Testing, testing. Can we get some confirmation that we are live? YouTube. Let's chill out music. Testing, testing. Oh my goodness. Okay, hello everybody. Can you hear me? Is everything okay? Oh my goodness. We are live. Hi guys. Everything okay? I got some music. Let me know if everything's okay. I'm drinking some freshly squeezed orange juice today. Yep. Hope everybody's good. Everything okay? Let me know if you can hear me. Got some warm-up music. Let me go to my YouTube studio. And we are live. Cool. Okay, guys. Everything okay? Today we got some nice weather, some windy and warm weather, and everything seems to be okay here in the great states of America. And we got 8 minutes till the market bell goes, and then I will start with the segment and our 1.5 hours of exciting music and exciting market information. Sorry guys, I'm getting ahead of myself here. Okay. If everything is okay, please let me know. Let me check out the stream on my side just to make sure everything is okay. Okay, Whitemore US markets. And yeah. Are you guys good? Everything great? Hi Andrew. Hi man, how you doing? Happy Friday and happy Thanksgiving. Hope everybody had a good Thanksgiving with the family and the friends, because that's what Thanksgiving is all about, ain't it? It's all about showing love, appreciation for the people that are there with you and have been with you for the past year. And we've all been going through ups and downs. The market's on the down, and we want to get it up. So yeah, we got for 6 minutes till the market bell goes, and I will play the market bell soon. So I hope everything is great. And yeah, if there's anything that you guys want me to check out today, please drop it in the chat so I can check it out, the market. I can check out the charts for you, where we're going wrong, what we are going to talk about, and what we are going to go through this session. Okay, I got all my stocks loaded up. I got my indices. I got my Dow Jones. I got my dollar index. I've got my US 100, and I've got my US 500, and we got our volatility bad boy. Okay, volatility seems to be holding. Okay, we got our Nvidia, Google, Netflix, Tesla, Microsoft, Amazon, Broadcom, Meta charts. I got a whole bunch over here. I've got about 2, 4, 6, 8, 10, 12, 14, 16, 18, 20, 22, 24 for you guys that we can all go through. So yeah, it's going to be fun. It's going to be cool. And if you want the music, let me know. If you don't want the music, if you want me to turn it up, or if you want me to turn it down, or I can leave it at a nice background chill noise for you. So yeah, let me know, guys, what you all about. How you feeling this Friday? Are you excited? Are you feeling good? How was your Thanksgiving? Let me know. What did you eat? Yeah, ate some nice turkey. So yeah, I want to get this going. We've got 4 minutes till the market bell. So yeah, guys, we got Bank of America once again. We got Alibaba, Moet Hennessy, Louis Vuitton, AMD, Advanced Micro Devices, Coca-Cola looking strong, sitting in that resistance level. And we got Cisco coming a bit down with low volume, which is expected because some people are not going to be holding this high price anymore. Here we could see this low volume down for the Thursday. Cool. So yeah, guys, this is the final push for the week. Final push for December, November, until we get into December. So that's going to be next week. And we're going to be super excited. And Monday is the 1st of December. Yeah. Cool. So that's going to be a fun time. And we got 2 minutes till the market bell. Okay. And so we're going to have a fun time going through our charts, through our stocks. And I got some nice information for everybody. Good morning, Lai Ling. Good morning, Ling. What's up? Yeah. So yeah, I want to know if any of you guys want to look at something specific today. I will check it out for you. If there's any other stocks, please let me know, guys. Hi, Daniel. How are you going? How are you doing? So yeah. Okay. Hi, Cleve. How are you doing? You want to see some Tesla and Google today? Sure. No problem. I will get that going for you. So we're going to have a good time. And yeah, 1 minute till the market bell. 1 minute, 1 minute. Let me get the bell noise out. Cool. 1 minute. And we should be ripping. Where are my share prices? Finviz. Yeah, there we go. Cool, cool. Microsoft up 1.5, Oracle 4, Palantir, Nvidia, and our semiconductors are up. And we are open. Okay, we are open. The market is open, guys. So yeah, once more, drop anything in the chat that you would like me to look out for you. Okay, so first and foremost, let me introduce myself. Good morning, everyone, and I mean that word, morning, to signify the start of a focused, disciplined cycle. So if you are expecting quick tips, rapid fire stock picks, or the ephemeral excitement of a speculation, I would please ask you to adjust your expectations. And what we are doing here is not entertainment. It is the deconstruction of capital flow. So what we're doing is the deconstruction of capital flow. My name is Andrew Scott Whitemore, and my career spans over 30 years in finance. 30. So I know what I'm talking about, guys. 30 years earned on the front lines, not in the classroom. I specialize in the convergence point where rigorous data models meet the volatile and very much often irrational world of market sentiment. All right. So let me repeat that. I specialize in the convergence where rigorous data models meet the volatile and often irrational world of market sentiment. So I seek to identify real durable opportunities where others only see noise. But not this guy. I see some real opportunities for me and all my followers. And we're going to get this show going. I currently serve as an investment advisor and broker at Ameriprise Financial Services, AFS. The weight of this position, the fiduciary duty, is paramount. When you manage multi-million-dollar client portfolios, your primary directive is not maximal return, but risk control and preservation of capital. So I hope you understand that. What I do is not just to maximize return, but the risk control and preservation of capital. And that is extremely, extremely, extremely important in the world today that is full of traders and fund managers. So I really know what I'm talking about. And this is the mindset I'm trying to transmit to you. I really want to transmit this to you because this is extremely important, as I've seen people blow accounts, lose thousands, hundreds of thousands of dollars just purely because of sometimes the lack of experience, greed, or they just don't know which rope to pull on. So guys, Through Whitemore US Markets, I bring the institutional discipline directly to you. And my mission is to provide insights into US stock market logic, portfolio management under stress, and practical wealth planning approaches that boost returns through professional, repeatable strategies, not luck. So I help with practical wealth planning approaches that boost returns through professional, repeatable strategies and not luck. My approach is steady, it is disciplined, it is built on clarity. Whether you are newer to markets or an advanced trader looking for structural rigor, you will find the reliable window in the US markets right here. Today is Friday, and this is confirmation day. We audit the structure of the market and prepare our capital allocation strategy for the pivotal month ahead. All right, we've got an extremely important month ahead. As previously, as I mentioned, we got a lot of asset managers who are looking for that NAV, that net asset value, positive report looking at the end of the year, and we will be seeing a lot of sector rotation. Going to see a lot of money moved to other parts of the stock market. So people have made extremely great returns through tech mostly this year, and now they're going to be taking that out and they're going to be putting their money into places such as defense, medicine, biotech, where gains are very steady and not as extremely high as tech, because they've already made their profits. So they're going to be putting their money into different sectors. Because remember, guys, money doesn't leave the market, it stays in the market. And that is what we like to hear. So we will deconstruct 5 pillars of institutional trading. So let's begin with the psychological difference between amateur and professional. So number one, so guys, we're going to talk about some psychological differences. Okay, some psychological differences. Let me get a pen out here so I can just tell you. Number one, circle, number one. Get you some text. So we are going to be reading the market, not just observing it. Reading, let me get my spelling right. Number one, reading the market, not just observing it. Okay, number one. And there are 3 techniques for observing the market. So we got to focus, shifting from emotional reaction to structural analysis. So emotional reaction is usually the result of what we are doing and what we gain or what we lose. But structural analysis is intent, how we will execute, when we will execute, and there is very little emotion in structural analysis. Alright, so the fundamental flaw in retail trading is that it's biological reaction. Sorry, the fundamental flaw in retail trading is that it's about a logical reaction. When price rises, when price rises, look at that, guys. When price rises, look at that, guys. Wow. When price rises, dopamine floods the system, and then you chase. And then when price falls, cortisol spikes. You panic and run. You panic, 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 and run, run, run. Professional trading is the complete antithesis of this reaction. You got me? Antithesis of this reaction. The core of professional trading is not looking at the result or the green candle, but anticipating the true intention behind the move. So technique A. Let me go back to my technique. Where did I draw that thingy? Oh my goodie. Is it in volatility? No. Yeah. Okay. Technique A. Who is controlling the pace? Okay. So technique A. Who is controlling the pace? Assessing market strength, guys, isn't about looking at rises or falls. It's about pace control. So sentiment control, which is the sprint, so that is a market rising rapidly. Okay, a market rising rapidly. Let me see if I can show you an example. The market rising rapidly. Here's a nice example. Okay, so we can remove this one and we can remove this. And when the market is rising rapidly, characterized by wide daily swings and large gaps, this is driven by retail excitement and short covering. Okay. So when there's a sprint and the market is rising rapidly, this is driven by retail excitement and short covering. Such moves are brittle and difficult to sustain because they burn their liquidity fuel way too fast. So they're burning their liquidity fuel. And then we also have institutional control. So this is the marathon. So the market is fluctuating. Let's see. The market is fluctuating. Boom, 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 boom. And perhaps even appearing boring or consolidating. But funds are quietly controlling the market. This is the prelude to a reliable trend. Okay, a prelude to a reliable trend. And they are building a base slowly and methodically. Alright, so I think now I can give you a real world example of pace. So let me pull out some GameStop. Alright, alright. Alright, alright, alright. See, look at that, guys. So, GameStop during its meme spike, that was when we had extreme sentiment control. Wow. Okay, so when we had extreme sentiment control. Back to its $22. Yeah, it's at a nice. It likes that $22 range. And it shot up all to 118. So during its meme spike versus, yeah, there was extreme sentiment control and it was way too unsustainable versus the slow, deliberate grind of Costco. So if we go back and look at here in Jan 21, we had extreme sentiment control. And Costco. Let's look at Jan 21. Yeah, check out that price. In the typical quarter. So institutional control can sometimes be relentless and durable. And we seek the latter. So this is what we kind of want. We don't want what we saw in GME. And look at this control, guys. It controls, it holds for Jan for 6 months. And then institutional control comes into place. And we had and it was at this range for a really nice time. And yeah, we got Costco at a lower high, a couple of lower highs at $909 currently. All right. So volatility structure. So technique B. So technique A I spoke about, and technique B we got volatility structure versus candlestick charts. Candlestick charts are the results, but volatility structure is the process. So a clean, orderly structure and orderly, predictable pullbacks that respect support indicates a stable and healthy trend. So a clean structure that is orderly, has predictable pullbacks that respect support. All right, predictable pullbacks that has respectable support. So I can put in our support zone over here. And I can have a nice resistance over here. Cool. We got a nice resistance over here. Yeah. Okay. And it's currently in our support level. And how long did it stay here? Since August 24, for about 2 months. July. Okay, so we could see it possibly trading here for about 6 months. But we will look at what's happening So we got volume spiking here, low volume but a big candle, meaning people might not like that price. Okay, because Costco's gone a little bit parabolic. I wouldn't say parabolic, but it's gone semi-parabolic. Okay, but it's a healthy trend. It's a healthy trend. But a chaotic structure with wild whipsaws and large reversals makes the market unpredictable. So if I go to my bad boy over here, this structure is not a healthy trend, and it makes the market unreliable, and institutional investors judge whether the rise is healthy, stable steps, not merely whether the price has risen. Okay. And technique C, the quality of trading volume. So sometimes news is lagging. Well, most of the time news is always lagging. By the time a headline hits, the algorithms have already executed. So let me say that again, guys. News is lagging. By the time a headline hits, the algorithms have already executed. So the quality of trading volume, however, never lies. Never, ever, never. The quality of the trading volume never, ever lies. And we use volume to determine the intention. Is it a shakeout or is it real money accumulation? Or is it distribution or selling? So, in conclusion, retail investors look at the results. Institutions look at the process, the long-term process. And once you understand the process, profits will naturally flow. Okay, guys. So that's the end of part one. I just want to take a sip of my orange juice and I will go to the chats. And if you guys have anything that you want me to look at, please let me know. Cool. And I'll be back in 30 seconds. Right. Cool. So, guys, Apple. Okay, so I'm just going through my chats. Good morning, Run. Good morning, Sarah. Yeah, Tommy. Tesla's always the same, lol. Ami, you want me to check out Apple? Cool. Let's go to Apple. Um, Apple's in an all-time high, guys. It's in an all-time high. So what do? You either sell and hold down to the support level, but now is a good time just to watch the market flow because we have some decent volume on the price that Apple is on at the moment, meaning people really like it and they actually would like it to be at this amount. So to be honest, I potentially could see it hit the $300 mark within 12 to 24 months, and I won't be surprised at all. Cool. So yeah, I'll be really surprised if it doesn't hit the $300 mark in the next 12 months. All right. So here we can see a massive gain from Feb to June. And that's usually when the financial quarter opens. And if we go back at 2023 from Feb, bam! Next year in Feb, bam! And if we look at December last year, it fell, Feb it went down and up again. 2023, Feb, let's look at December. Yeah, it just climbed. It's just a massive soaring over there. So, yeah, Apple could be a good purchase to add into your portfolios. But wait. Let's wait for our confirmations and signals from me and Sophie. And just to let you guys know, if you're not in our Telegram group, please check the link in the bio and get back to me so I can let you guys know what's going on. Alright. Alright. So, let's get back to the show. So, part 2. Talking about trading quality. So, the core indicator, what you have to focus at. And what you got to focus on is volume to price, analysis, and the difference between genuine growth and false momentum. Alright. So, guys, trading quality is the most important concept in the seminar. Price is the surface. Trading quality is the underlying force. A rise supported by real money, guys, is sustainable. Or a rise driven by a sudden surge of sentiment is prone to rapid collapse. Okay. So, a sudden surge of sentiment, listen to me, guys, it is prone to a rapid collapse. And we see it all the damn fucking time in this market. Just like Tesla, got a massive sentiment urge, AI bubble, and then it crashes down. So there's a lot of things to consider when we are in this game and when we are playing the long term. Alright. So guys, if there's anything else that you want me to check out, just let me know, as I will start to continue with this segment. If that is okay with you, let your uncle Andrew Whitemore know, because I am here to help you guys out. And don't just lurk in the chats. chat to your Uncle Andrew. And once more, if you are not in the Telegram group, please let me know. Or just type there at the bottom, yo Andrew, I need to get a hold of you. I want to be a part of this. How do I get more information from you, all the other people that you are working with? Alright. So we are now currently 40 minutes into the segment. Our market bar went off at 9:30 this morning. And we are going to carry on and have a good time. So, go back. Let me go back to Tesla. So, when sudden surge of sentiment is prone to rapid collapse. But I wouldn't really say this is rapid collapse. Similarly, we must differentiate between a normal shakeout, which is healthy consolidation. I can show you some healthy consolidation here. Healthy consolidation. And a genuine sell-off. Okay, a genuine sell-off, which is a risk signal. So if we look at Microsoft, we had a risk signal. Okay, and we see, guys, I drew the support area so beautifully. So we're in an excellent time to come in and put a buy signal in over here at the 468 range, because I'm a guru, guys. This is what I've been doing. I've been doing this for 30 years. I know exactly where to put my support and resistance in. And I actually did put in a buy signal for Microsoft. And I did let everybody in our Telegram group know about this. And we are up a nice portion since Tuesday. Yeah, we are up very nicely. So you could have made about $30. And if you had a massive position, we could have made about 1,500, depending on the amount of volume that you wanted to put in. But if you missed the signal where we put our buy in, there's another opportunity, guys. Don't worry about it. Okay. So for Microsoft at this point of time, we could see it potentially moving around and going back up to the resistance point. If we see that the market is moving its money back into tech, or if, well, yeah, we're going to see what's going to happen, because we've got three windows. We've got the window now of Thanksgiving week is over. We got the window of the first 3 days of December. And then we also got the window of the last week of December, which is called Santa's Week. So if you've never heard of that, that is a phenomenon that has been playing around in the stock market for the last 10 years, where we see December time, we have some nice things happening. All right. So if we look at Apple, last year December and during Christmas time, it had a sell-off. So not a good example. Let's look at Google last year, December. Yeah, it was just consolidating and a drop off. So I think last year December wasn't a good time. Well, it just shows you that December 24th and onwards for most tech stocks it's not a good time really. Yes, it's consolidating with Amazon. Okay, so method one, the hollow rise, the low volume rally. Low volume rallies are sentiment driven. Low volume rallies are sentiment driven. And yeah, guys, I also did put in a buy signal last week Friday for Amazon as we had a beautiful support over here. Just drag this out a bit longer for you guys. We want to go back. Always have to go back because we like it from the back. Cool. And I like it perfect. So yeah, guys, low volume rallies are sentiment driven and unreliable. Okay. And very, very unreliable. Rallies without a massive corresponding institutional capital is most of the time unsustainable. All right. So this is a ghost rise or a balloon. It's high, but it's empty. Look at this candle. Look at this candle. So a real world example. So let me see a micro cap stock that shot up 20% on a small niche press release, but on below average daily volume. All right. So actually recently we also had Google just release its new Gemini 3 and Nano Banana picture editing, if I'm not mistaken. So, but it didn't shoot up 20%, but we don't see much movement in the market. So Wednesday you can see here, and we had a skip of the day from the 27th to the 28th. Broadcom shooting out of its all-time high. Amazing stuff. 400 a share. It's also just looking nice and parabolic. Whoop. Okay. But not really. I wouldn't call that parabolic. Cool. So when the price moves because of a liquidity vacuum, not sellers, not aggressive buying, the moment a single large seller appears, the price collapses instantly. So the moment a single large seller appears, the price collapses instantly. And method two, the churn. We have high volume stagnation. High volume stagnant prices indicate distribution. All right. High volume stagnant prices indicate distribution. So that could be what we are seeing here at with Broadcom, we've got high volume, high volume, high volume, but it's stagnant in this area. It's consolidating in this area, right? So we can see that. But be very careful of this. This is the most dangerous pattern. Massive volume, but zero progress means institutional supply is perfectly absorbing retail demand. So the inventory is being transferred from the smart money to the dumb money world. All right. So if we look at Nvidia at the peak, peak, you see 3 straight days of a record volume, but the stock only moves 1%. Okay. That means 10 million shares were bought and 10 million shares were sold. So the institution is quietly exiting their position into the peak or into peak enthusiasm. So this is an exit signal. All right. So when we see it moving so much, guys, got record volume over here in October. $10.8 bull, 5.8. This is an exit signal, guys. Got boom, boom. All right. So yeah, when institutions is quietly exiting their position into peak enthusiasm, this is an exit signal. And method 3, guys, the glide. Moderate volume. Moderate volume and low volatility rally. So this is the gold standard of health. Moderate volume increases combined with low volatility rallies indicate stealth accumulation. Let me say it one more time. So moderate volume increases combined with low volatility rallies indicate stealth accumulation. So the large fund is building its position methodically day after day. This type of movement is the healthiest, most stable, and most likely to continue. So we follow the glide and conclusion. By analyzing trading quality, you see that trends aren't something you guess. They are something you see in the data flow. All right. So yeah, guys, that is the end of our third part. And let me just take a sip of my orange juice, and then I will go to the chats and see if there's anything that anybody would like me to have a look at. And if all is well, let me know how you are, guys. And if there's anything else that you want me to check, let me know. Cool. So yeah, guys, let me know if there's anything that you want me to look at. So let me just hit the... Let me just go to the stream and see what you guys are saying in the chats. Cool. Cool. Everything seems to be okay. Everything seems to be okay. So yeah, guys. Everything is great. Everything is wonderful. Everything is fantastic. Cool. So I don't have anything from you guys here. Right? So yeah, guys. Okay, cool. 1 minute break is over. Okay, so part three. Part three, guys. December trading plan. Phased execution is our focus. Phased execution is our focus. So there's a systematic low approach on capitalization on your end market tendencies, guys. So what I mean by this is professional institutions are the most stable, cautious, and rhythmic traders. We never go all impulsively. We use a phased approach to minimize risk during ambiguity and maximize returns during confirmation. So, phase one, small position testing. What is that? Small position testing. We are on a scout mission. So, we use small positions, 10 to 20% of our money for allocation. Why do we use this little? We use this little to test the market's conviction, liquidity, and capital structure. If the direction is wrong, the exit cost is minimal, and this ensures we are not trapped in major loss during the initial volatile stage. Alright, so let me repeat that. So small position testing, guys. We use small positions, 10 to 25% of allocation, to test the market's conviction, liquidity, and capital structure. If the direction is wrong, the exit cost is minimal. This ensures we are not trapped in major loss during the initial volatile stage. Alright. So, and phase 2. Yeah, phase 2, adding to positions after trend confirmation. The accumulation when the market trends, trading structure, the glide, and sentiment all align. We deploy the main capital 50 to 60%. We are averaging up and we buy higher because the market has validated our thesis. So we thought a lot. We had to concentrate. We had to think about what we're going to do, where we're going to put our cash. All right. So this is the most stable profit range. And let me repeat that one more time. Adding to positions after trend confirmation, when the accumulation, when the market trends, trading structure, and sentiment all align. We deploy the main capital 50 to 60%. We are averaging up. We buy higher because the market has validated our thesis. So, this is the most stable profit range. Okay, guys. And phase 3. Okay, let's look at Bank of America for a little bit. Let's look at Bank of America. Okay, let's draw our trend lines down from here. Oh, we almost got 1, 2, 3. Nope, we got 2 touches. Get that. Where's my volume? I don't like this. Where's my volume indicators? 24-hour volume. Okay. So guys, we are busy over here. We are busy with a live stream. So we got the Bank of America and the corporations going. And let me just check if my stream is live. Yep, it's all live. I got my audio going good. Are we on YouTube? Yep, I got my YouTube channel going. And I am busy streaming, guys. I've got everything going. So yeah, I'm busy with a live stream, guys, if you just want to know. And if you got any questions, please drop it in chat so I can chat to you guys. Okay, give me 1 second. Cool. Sorry, guys, I just got a phone call from my sisters. Okay. Cool. So, yeah. I got 1, 2, 3 wicks. 1, 2 wicks for the Bank of America. And let's just move that a little bit. So we got, what is this, guys? Is it an upward trend or a downward trend? You tell me. Drop your comments in the chat so I can find out. Because for me, this clearly looks like an upward trend, right? And this might just be a good time to get in because we've got a nice support zone over here. I see it as a support. Everything is going up these days. Alright, alright, alright. So yeah. Boom. Down till there. Okay, cool. So yeah, guys. And where is my volume indicator? All right. Nope. Nope. But it's okay. We don't need to see that too much. What is it moving here? I want volume, volume, volume. RSI. Okay, cool. So yeah, we got a lot of volume over here. Steady volume. And right here it's low volume, but a big candle. So we got a lot of potential to talk about. So, yeah, guys. So, Bank of America, it is seems to be doing good. We could potentially see it have a nice shakeout and go up into all-time highs. It already did. Now we got just people seeing if they want it over here, and it at not really a support zone, I would say. A little bit. I think this is a better zone for support. 48. Last time it was over here was in July. So it's now, yeah, we could say the next supporting zone has been here, which was a few months ago. Okay, cool. But then otherwise, phase 3, pushing up net asset value in the final weeks of December, guys. NAV, net asset value. You got that. We spoke about it Wednesday morning. Okay. So in the final weeks of December, institutional funds leverage momentum to push up the price of their winners. And this is the NAV push. A consequence of fiduciary pressure to maximize the year-end performance curve. So let me say it one more time, guys. So in the final weeks of December, institutional funds leverage momentum to push up the price of their winners. And so they put a lot of pressure to maximize the year-end performance curve. And we capitalize on this predictable flow by holding our confirmed positions for maximum impact. Maximum impact, guys. All right. So, in conclusion for this section, December's strategy is a disciplined rhythm. We're testing the waters, then confirming, and finally making a decisive move. Never rush, act rashly, or make premature moves. All right. So yeah, that is what I want to talk to you guys about in this part. Okay. So guys, we got 30 minutes left of our stream. 30 minutes left. Let's push through. We can do this. We can get it done. And let's get our morning started with an awesome time of market news, share prices, stock data. Extreme fear is driving the US market right now. Dow Jones up by 241 points, 0.5% change. So yeah, guys, and the Nas up by 54 points, 2.4%, great change. But fear is driving the market right now, and that could mean a lot. All right. So, if there's anything else that you guys would like me to have a look at, let me know, guys, and I will get back to you shortly. Let me just have a look at the comments. If there's anything I need to go through. Okay, we have a WTM, WMT, Walmart. Let's have a check at Walmart. Yeah. Okay, so we got Mr. DRS E8R. He also wants to have a look at Walmart. And we got a dude called, what's his name? Cleve? Cleve CK. Yo, what's up, man? You've been here for quite some time now. Let's have a look at Walmart also. Okay. Cool, cool, cool. Please drop a like and subscribe, guys, so I can see what's happening down in the stream. But we got quite a few people watching. 6 people watching. Nice. And I hope many more people watch this throughout the week or weekend. So yeah, Walmart trading at an all-time high. Boom, boom, boom. What type of trend is this, guys? What type of trend is this? Is it a downward trend? Is it a downward trend or an upward trend, guys? Let me know what you think of Walmart. Hi, Teresa. Good morning. How you doing? I hope you're all well. We're just having a quick quiz at Walmart. Trading at an all-time high of 110. Crazy. Crazy, crazy, crazy. All right. Look here, guys. Look at this volume coming in on Thursday. Last Thursday, we had a massive volume. Remember when a lot of volume comes in, and when there's a little volume at a high price, usually it shows that people don't really want to support it. All right. So we got Walmart over here. Where is our support zone? I think it is right here. We got a nice support structure over here. Support. Big support of $95 to $100. People seem to love Walmart at $100. And I've got a massive amount of Walmart sitting in my portfolio, and I'm loving it. The gains have been great for me as we got back in over here during September. September was a good time. 75. So we're sitting with a massive green with Walmart at the moment. All right. So Walmart raised its annual forecasts again, signaling strong sales expectations, while competitors like Target report a drop in same store sales. So let's check Target after this. But once again, Walmart's at an all-time high. I wouldn't really recommend getting into this bad boy right here or putting in a sell right now because you don't really, unless you got 10 to 20% of capital gains, of capital to expel, and you really don't mind losing that money. Um, Shorting at an all-time high is usually an okay bet. In this case, we've got volume a low amount at a very high price. All right. So let's go and check out, what did we say? Let's have a look at Target. Target. Yeah. Okay. Target was an all-time high of there last year, but since October, super low volume coming in during more super low target coming in for Target, and right now we got some low volume also here for the day so far. 2.5 hours left for this candle to close, but it will most likely close on the green at about $91.20. Okay, so not too bad, not too shabby. Moved up nicely today, but cool. And hi Sarah, if is there anything you want me to have a look at, please let me know and I'll check it out for you. But Target, is this an upward trend or downward trend, guys? Tell me, tell me, tell me. What do you think? What do you think? Because I obviously think it's in a downward trend. All right. And last time it was trading at $84 was, wow, 6 years ago. That's massive. So if we were shorting over here, we would have made insane gains. But we put in a shorting over here earlier this year because we saw extreme surge in sentiment for Target, and it was just going down, guys. And then I decided, let's put a shorting over here at 145. $145. Yeah, over here 144, 143.85. Okay, just to be exact, so you guys don't get angry at me for lying to you. Okay, so yeah, we got a nice downward trend on Target. Massive support zone. People like it in this area. All right. And we can put a resistance zone in, yeah, around there at 110. 99 to 110. 108. Okay. Cool. So yeah, guys, I've been doing this for 30 years. I know exactly what I'm doing. So if you have any questions, please let me know. Cool. And next, let's see. What else do we have? So let me go back. Why retail always buys where they should wait. So the 4 zones of liquidation. So we got to focus identifying and avoiding the high risk. That is ambiguous zones where retail capital is destroyed. So where retail capital is destroyed, guys. Okay. So why do many retail investors lose money? So many retail investors lose money. Sorry guys, my microphone seems to be cutting out. I don't know why. So why do many retail investors lose money? They buy where they shouldn't. Simple. Because they're stupid. You shouldn't buy there. They enter ambiguous areas where institutional capital is actively seeking liquidity. So they enter areas where institutional capital is actively seeking liquidity, not providing support. So we adhere to one principle: avoid ambiguity. Invest only in clarity. So, zone 1, the long sideways consolidation. The stop loss grinder. So, that is a long period of sideways consolidation. A long period of sideways consolidation is a stop loss grinder. Shutterstock explore. So we got to explore the longer the consolidation. So the more false signals it generates. Brief spikes above resistance and brief dips below support. So false signals are brief spikes above resistance or brief dips below support. Entering here means becoming a target for the market, which is hunting liquidity. Before the real move, we have to wait for the clean confirmed break. Okay, so zone 2 is the pullback after a large bearish candle. Okay, so the pullback after a large bearish candle, like here. This is the dead cat bounce. So a small rebound after a huge high volume bearish candle is usually just a correction in the selling pressure. So a small rebound after a huge high volume bearish candle is usually just a correction in selling pressure, not a reversal. Not a reversal. This is the dead cat bounce. The price is breathing before the inevitable second leg down. So if you buy this dip, you are buying the very moment the market confirms the downtrend. All right, so it's confirming the downtrend. And zone 3 is where the false breakout, so the false breakout with mismatched price and volume. So the price surges above a key resistance. The price surges above a key resistance. Let's see. Where do I have some resistance levels drawn out? So these are some new charts. Okay, so we got Broadcom. So the price surges above resistance over here. We got resistance. The price surges above resistance. But the volume is average. Volume is average. The volume is average. It's a hollow rise breakout. So this is usually a trap designed to induce buying from momentum traders. So it's designed to induce buying from momentum traders, providing the necessary liquidity for institutional sellers to exit. The price reverses and closes back inside the range, trapping the impulsive buyers. Okay. And zone 4, the false rise with no volume trading. The false rise with no trading volume. If the price is rising but the volume is absent, no real capital is committed. The ghost rise is easily crushed by even a minor increase in selling pressure. So it's trying to find a price where it's surging but low volume. Damn, this chart does not look right. This is not right. Oracle, medium volume, average. Exxon, I think it's going to be hard to find one as of now. Costco, not, it's okay, it's okay. Yeah, there's a nice example. Price is surging. Sorry. So price is surging over here. But the volume is absent. So no real capital is committed. This ghost rise is easily crushed by even a minor increase in selling pressure. So this ghost rise is easily crushed by even a minor increase in selling pressure. Minor increase in selling pressure. Not a lot. Boom, 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 boom. Destroyed. So making money isn't about daring to buy. It's about buying at the right time. The time of structural clarity and volume commitment. Okay, guys. And number 5, the last part of the stream. Let me know if there's anything else you want me guys to check. I'm going to take a 1-minute break and just get some water. My throat is getting hurt. I've been talking for longer than an hour straight with super enthusiasm. So just bear with me, and I hope that I don't make anybody angry for just taking a quick sip of water. Okay, guys, let me know if that is okay. Cool, cool, cool. Okay, guys. Water? Yeah, I'm gonna be drinking some water because I gotta. Um, so remember, guys, I'm from America, and we don't say water, we say water. So I'm just taking a break. Give me 1 minute, and then I will respond to any of everybody in the chat. And if you guys have any comments, please let me know. And I will be able to help you guys. But yeah, a bottle of water is also something that I would like to have. But we say water. Okay. Okay. So yeah, guys, last 10 minutes. Last 10 minutes. My throat is sore. And let's see. Cool. Yeah, guys, so volatility structure versus candlestick. So how about we go to our volatility index, and let's close our trading panel, indicators, volatility index. Why is this keep doing that? Latest news, 24-hour vol. Delete. Delete. Volatility. Okay, volatility index. So, volatility structure versus candlestick charts. So, institutions never look at short-term candlestick patterns. Okay, guys, they never look at short-term candlestick patterns in isolation. So they look at the health of the volatility structure, the overall rhythm of the market during pullbacks and consolidation. A stable structure ensures the continuation of the trend. So a stable structure ensures the continuation of the trend. A chaotic structure like this, guys, chaotic, it's all over the place, makes the most beautiful candles mere illusions. So chaotic structure makes these candles look beautiful. This is beautiful, amazing. But a shallow pullback, a slight pullback followed immediately by buying, indicates a strong trend. So let me see if I can put my volume also in. Why is this doing that? Okay. So buying indicates a shallow pullback, a slight pullback followed immediately by buying indicates a strong trend. So we got shallow pullbacks, big pullback, shallow one, followed by buying, indicates a strong trend. So the buying support is overwhelming, preventing the price from reaching typical retracement levels. This is the characteristic of a high conviction move. Okay, so a deep pullback that doesn't break key levels is a deep pullback that holds key structural support. Okay, ooh, so we got, yeah, we see it broke the structure, and so for example, the 50-day moving average or previous swing high indicates a healthy trend. The previous swing high indicates a healthy trend. So where do we expect this to go? S&P 500's trading, yeah, at an all-time high. So imagine this, guys, if you got in at an early time. 2 years ago, we've seen the S&P 500 just boom, massively increase. So yeah, we will see what happens within the upcoming months and towards December. So this indicates a healthy trend, and this is a normal turnover, purging weak hands, allowing patient institutional capital to reload at a better price without compromising the structural integrity of a trend. Okay. Number 3, a small pullback with low volume. So a pullback with low volume indicates a fragile trend. The lack of selling volume is good, but the lack of buying defense is concerning. It suggests indifference from the institutional side, making the trend unreliable and easily weakened by external news or pressure. Number 4, a huge pullback with high volume. So a huge pullback with high volume is an extreme risk signal, and this is definitely structural breach. Definitely structural breach. Okay. So this is the definitive structural breach. High volume on sharp decline means institutional investors are retreating. This indicates a genuine sell-off and should be treated as an immediate signal of systemic risk for that position. All right. So final conclusion. We have the mandate for discipline. We have covered the foundational logic, the quality filters, the rhythmic execution plan, and the geographical risks of this market. Your mandate derived from 3 decades of fiduciary experience, and it is to instill discipline, guys. The market offers infinite opportunities for impulse. It offers very few for systematic success. Trade the structure, trust the volume quality, wait for clarity, because this discipline is your greatest edge against the emotional impulses of the retail crowd. So guys, I am Andrew Scott Whitemore. Thank you for your focus. Apply the structural analysis this weekend and you will see with the markets, with clarity, you will see how things will start to move in your favor. I will see you in the next session, guys. Have a disciplined and good weekend, guys. And I will see you next week, Monday. And we are going to reach our 200% profit gains for the week. I mean, for the month. And we are going to have an awesome time. And yes, that is me, Andrew Scott Whitemore. Peace.